Welcome to these simple business money moves, where I literally walk you through how I manage my own finances inside of my own business and in real time. And I teach you how to be a player, not a pawn in the game of money. If you've ever thought, I know I should be looking at my numbers, but I don't even know where to start, you're in the right place. I'm Chelsea, and this series is basically a real-time look over my shoulder as I manage finances inside of my own business. This is not theory, this is not fluffy or overcomplicated advice. It's just actual CFO work happening in real life. See, I'm flipping the script. Usually it's me peeking behind someone else's curtain, but I'm giving you a front row show behind my curtain. Because when you own a business, every week, month, quarter, and year, there are financial things that business owners really should be doing. But most people either don't understand it, they avoid it, or they feel completely overwhelmed trying to figure out where to even start because nobody taught them. So honestly, I get it. I know I am a nerd and not everybody nerds out the way we numbers people do. So I'm going to make it easy for you. Look, nobody starts a company to stare at spreadsheets and reconcile transactions at 10 p.m. while questioning every life decision that led them here. But here's the truth. You cannot build financial freedom from a place of financial avoidance. So I'm going to show you in a very real life way, not a jargony lecture on things that may or may not apply to you. Real life, what I do. And the goal is simple. I want you to leave every episode with a clear action plan for your own business and just one thing that you can start doing. We're not looking for overnight do everything. We're not looking for perfection. This does not need to be fancy. Just clear and one step at a time. Because most businesses don't have a revenue problem. More revenue is not the answer to their problems. What they have is a visibility and a systems problem. So grab your coffee, open your numbers, and let's do CFO work together. All right, welcome back. This is the Do It With Me. I'm a CFO, I'm a money person. You don't have to be good at math. You don't have to be an accountant or a tax preparer, but you do need to know your own business's numbers. So in this series, I let you peek over my shoulder as I do the things for my business that you should be doing for yours. Now, granted, I'm a nerd and I really enjoy doing things like this. A lot of people that I work with find out they actually like it too. Once they get over the avoidance of it and the resistance of it, actually knowing your business numbers and playing with them, what it does for you is it shows you the possibilities in your business, as well as the cash leaks, which happen in more businesses than not. So check out the entire series. What we are going over today specifically is reviewing the budget variance report. Now, here is, I know the word budget makes you want to cringe, but we need to shift our perspective on this. A budget is not a cage. It is not meant to trap you or restrict you. It is meant for clarity of your boundaries, keeping your financial goals in mind. If you don't have boundaries, think about this in terms of relationships in your life, whatever relationship pops into your mind. If you don't set boundaries with the people that you have relationships with in your life, you risk them crossing those boundaries. And now you are continually going to compromise yourself in this relationship because number one, you don't know where your boundaries are, and or number two, you're not enforcing those boundaries. A budget is boundaries around your money. Once you get through the setup piece of it, it's not that big of a deal. Like, we don't need to make it a big deal in our head. Those boundaries are protecting you. They are prioritizing your finances in a way that you've defined you want your finances to be. And look, you're either going to allow your finances to do whatever they want and run amok, or you're going to control your finances. Because if I had to guess, you don't want to live paycheck to paycheck for the rest of your life. You don't want to watch other people go on these vacations and do all these things that you want to do, but you don't have money to do it. In order for you to get to that place, you have to pay attention to the thing that's going to get you there, your money. So the budget variance, once you have established a budget for your business, and do not look for perfection, don't tell yourself you're not quite done, you don't think it's correct. just get a budget in place. Give it your best guess at first. Because by looking at this report every single month, you're going to see how accurate your best guess was. And then you're just going to continue to get better and better and better at guessing until you know exactly where your money is going to go. Not just this month, but for the next year. But give yourself grace. It takes time, one step at a time. So give it your best guess. Once you do, your accounting software should allow you to enter that budget. That's the column we see right here on my screen each month so that you can have this report to look at. Now, I'm looking at this report for quarter 1 of 2026, but the monthly is still the exact same process. Monthly is where we're going to like be in the weeds and really dial it in and fine tune it. Quarterly is when we're going to do that review as well, but also like step back and ask the bigger questions, which I will show you in a later video. So what you're seeing here is 3 columns, and we can ignore this last column for now because the numbers are the exact same. This column, January through March 2026, is what happened in real life in my business. The monthly budget column is what I had planned on or anticipated Q1 produce in my forecast. Forecasts are forward looking, forward predicting. The variance column is telling me how much more or less came in or out based on my projections. So this is like us looking each month and comparing what did we think versus what happened and what can we learn from it? What can we adjust to be more accurate going forward? When I look at this, first of all, I separate my income into buckets, as you should, because it's incredibly helpful. My buckets are made up of the setup services. These are indicative of new clients, in other words. So for me, I like to see the setup services because they are different from the rest of the buckets. And it's a really fast way for me to look and see how many new clients did we get any given month. So in Q1, you can see that we actually did better than we had planned on to the tune of $900. So this is a thumbs up for me. And you can notice like we had planned on one new payroll client that we didn't get, but we also didn't plan on a cash management setup client that we did get. That more than made up for it. So again, we're not looking at this and being like, darn, this is bad because I didn't get a new payroll client. It's we actually did better than we planned, just in a different way. And there's nothing wrong with that. That's perfectly fine. At the end of the day, we care less about where the revenue came from and more about the fact that we hit the goal that we set, right? The next bucket for me is financial foundations. Now, when I describe finance, I describe it in 3 pillars. There is the foundation work, then there is the framework, and then there is the flywheel. And so, how I describe it in my mind, not surprisingly, makes it to how I describe it in my financial reports. These financial foundation services happen every month like clockwork. These are monthly clients. We do the things for them repetitively, consistently, predictably. So, I like to see this because if we have no one-time services or any CFO clients, this is how much we are bringing in consistently, reliably, every single month. And that's nice for me to know that, every quarter we're bringing in just shy of $180,000, and that's not including all of our services. So that's very like safe revenue predictions for us. In Q2, we did better with this as well. Now, it's worth mentioning, by the way, this monthly accounting line item, we struggled with forecasting accurately for, I would say, at least a year. We were always behind in this monthly accounting. And what we realized is that some of it is timing. So, for example, if I see these monthly bookkeeping setup clients up here, every time we get a new client, it takes a month or 2, sometimes 3, for that monthly residual revenue to kick in because some of them aren't starting as of this month. Accounting is very monthly cycle-ish, right? So once we figured that out and we made our new client goals a little bit more realistic because we were pretty aggressive when we started doing this. And by we, I mean me and my marketing person and my salesperson. I collaborate with them when we forecast these numbers out and when we set goals for new clients and various other things that I will go through in another video. So it's really nice for us to have nailed down that monthly accounting line item because it gets a little discouraging when you look at it and it's consistently less than you planned. That's a pattern, right? And one of the things I aim to teach people is know the difference between an instance and a pattern. A lot of times we freak out when an instance occurs, but we don't need to. And what happens when you track your data consistently is that you can observe it consistently and you can tell immediately an instance from a pattern. Instances deserve attention, but not reaction. Patterns deserve even more attention and a digging in process. And the patterns are what we're really looking for so that we can respond instead of react. The third bucket, and it only has one service item in there, but we can change this at any time. I often change how my financials are presented when I want to see it in a different way, which is I also want to give a shout out to Zero, and I'll put a link to our referral code for Zero. But it's why one of the reasons why I love Zero so much more than QuickBooks Online. Zero's reports are so much easier to customize. So if you want a video on that, let me know. But one of the reasons. Anyway, my third bucket, project work, is back work. So when people come to us for monthly accounting services, sometimes it's not uncommon that, like right now it's May. Someone could come to us today and not have any of their books done for this year. A lot of people come to us at the end of the year or the beginning of the year, having not done their books all year. And now they need to do taxes, and their tax preparer is like, you need to give me financials, you need to go do your books. That's what this line item is for us. It's a little hard to predict this one. It's definitely not, financial foundations. These are happening every month. My invoices go out automatically. This is recurring. Back work, we have no idea when somebody's going to come to us with back work. What we do know is our historical data, and that's the value of keeping that data up. We can look back over the past 3 years and calculate an average of just the past 3 years. And that is going to be somewhat reliable. And this can swing drastically for us. So for us, it's really a year to date number because we don't know well, and we're still learning. And maybe one day we do find out because we're looking at the data a little differently. But for now, it's not a bad forecast. And any 1 month can make up the, $8,300 that we're short Q1. The last bucket is made up of our CFO services. These are different from setup, financial foundations, and project work. We basically offer two main things when I describe it to people. We offer the unsexy monthly accounting payroll stuff that nobody likes to deal with, but it has to be done. But then we offer this level of service that is like our sexy service. And that is, we have all the boring stuff done. Now let us help you make sense of it. Kind of like what I'm doing with you right now, really teaching people, showing people, and giving people our framework on how to manage your finances, how to do all the things, how to know where money's leaking, and how to tell the story, how to read the story behind your numbers. So that's what you can tell really gets me on fire, what I really love doing. And we do this in a number of different ways. So for Q1, we came in way under target to the tune of $18.5 thousand. Now, I don't look at this and get discouraged, and I'm going to tell you why. Our CFO services are fairly new. We're really kind of still figuring out the structure, the best way to do it. It's one of those things that I always want to be fine-tuning and improving and offering in different ways because I'm really trying to figure out how to reach more people when it comes to understanding their numbers. Because there's such a huge avoidance around it, I have to get creative. And every time I do something, I learn about what I can do differently to reach people in a more meaningful way with the end result of they're actually going to take this information and use it because it's transforming. And there's a lot of automations and things you can do to simplify it. It's not as complicated as people think. And there I go getting passionate about it. So that doesn't discourage me because, for example, our fractional CFO program, I am at capacity now. I have as many clients as I'm willing to take. And so we kind of stopped selling it. So I'm not surprised that we're short to the tune of what looks like two people there. And that's fine with me. Our CFO Profit Ready program, we're really still launching it. We're still getting the momentum going. We knew that we set aggressive goals in terms of the number of participants that we wanted in each cohort. So, really, what this tells me is that I need to update my expectations for fractional CFO, and then I need to get a little bit more realistic with my Profit Ready program and still creatively think about how can we get more people in seats. So sometimes you look at this and it's really just for information. Again, this is the perfect example of this is an instance, not a pattern. So then these little line items down here that are left, they don't really fit into one particular bucket, although I do see one that I can move, annual project services. I can actually put that one up in the project work. See, this is why I wanted to do this series. In real time, I, as a CFO, am organizing my financial reports. So let me just show you while we're here how easy Zero makes that. Here's what the back end of Zero's report, custom report editing version looks like. So you can see here, this is how I created my buckets. Now, if I wanted to collapse this and only see a total in the monthly reports, that would reflect just the total. And then I could come in here and open it up to see the line items. So that's pretty cool. I like that feature because it can make your financials quicker or take longer. And there's a balance between how much information you want to see. There is definitely too much, and then more often than not, there's too little. So there's this balance that we have to strike. Because look, if I was to collapse all of these, for example, and I only saw my buckets in terms of the totals here, it would make my income section much smaller. See this? And I could look at it though and say setup services right on point. I don't need to see the detail. This is one of those moments where it's like we don't care as much how the money comes in, just that it comes in or which services, right? It's that big revenue goal that we're really interested in. So this one, I don't even need to see the detail in these first two. Project work, that's self-explanatory. It's one line item on the other format anyway. CFO services, much under, but again, that one would be interesting to me to see. But it's just that easy to kind of still have that level of detail, but not have to see that big long list if you want each month. Here is the line item that I want to move, annual project services. I want to see that up with project work. So now that I've simply drag and dropped it in there, I'm going to update the layout. And now here is where it is so important, at least at Zero. You have to save this every time. Otherwise, next time you're going to have to make these updates again. A little annoying, but every software has their things. So let's just get through it. And now, so beautifully, we can see annual project services up in our project work bucket, which makes more sense than it hanging down here. Because I want to, it'd be nice for these all to have buckets. My OCD wants that, but it's really not necessary. So, and yes, I have a late fee line item. And if you're a service provider, so should you. This is one of those things that shows up and it's a reflection of your money beliefs and how you feel about money. You should expect to be paid on time. You should not feel any guilt about reaching out and asking for your money and expecting it on time and having consequences if people don't respect your timeline for expectation of getting paid. Perfect example of know your boundaries, or in this case, your standards, and then reinforce your standards because as always, people are going to take advantage of it. People are going to not want to pay you. They're not going to take paying you serious. This is one of the ways that we can show people we are serious about getting paid. So it looks like we had one late fee, which I need to up that. Honestly, that's a little low, and I've had that for years. We always anticipate a bit of a refund, and we had an exceptionally large project in Q1, which is why I know that this is a little bit more than we had budgeted for. So that's all right. It is what it is, and we anticipate it. It's pretty close, so not a big deal. Other than that, not a lot to really get hung up on in this little hanging list. And even though we were almost $25,000 short in Q1, most of that came from project work and CFO services, which project work is not the easiest to forecast, so I'm not really worried about it. And CFO services, we have some adjustments to make here to make it a little bit more realistic. So this doesn't discourage me. I see it as something that I know how to adjust it to get better, a process I'm continually doing. Because here's the thing, you're always going to be creating new things in your business. I am creating new things in my business. That is the CFO service for me. So this is more of data for me to get curious about rather than to judge, because we're still building it. We're still figuring it out. This is not perfection. Now I look at my team expenses section. This is a section that we focus a lot of time and emphasis on when you're looking at your financials. You'll notice that not only do I have a bucket for team expenses, I have sub buckets. In my sub buckets are separated between contractors and wages, and then I have my billable and my non-billable team members, which is so incredibly helpful for me because billable team members are going to go up and down with revenue as we grow over time. So they're going to go up. Non-billable team members aren't directly related to revenue, so it's helpful to just see those separately for us service providers. One of the most important KPIs for service providers is their team cost as a percentage of payroll. So that's why I suggest if you have a team, everyone create these sub buckets in your team expenses and track it separately, because that cost as a percentage of revenue is like the fastest number to tell us if we have too much team costs. Now, you're probably already noticing that I have contractor bonuses and profit share wages that do not have a budget line item. There's a reason for that, and that reason is going to be explained probably weaved into a number of different videos. But for this video's purpose, I don't budget for these two line items in here because those amounts come out of our profit. My team gets profit shares. The more profit our company generates, the more profit share they get at the end of each quarter. If I was to budget for them, it would take away from our projected profit. I budget for income minus expenses, which leaves more or less profit. Of that, they get a percentage. So I plan for it in a sense that I set it aside, but I don't put it in here because it would make my profit projections inaccurate. Next, we get to marketing and promotional. This is another bucket that I would highly recommend you have, and you make these line items underneath this bucket meaningful and make it in a way that you can look at each of these kind of areas that your money is going and ask, is this producing an ROI for me, a return on investment? And I'll talk more about in different ways what an ROI is and how to track it between and woven into all of my videos. For example, when I look at this, I look at, we have an events line item. These are the events that we go to, and the ROI isn't necessarily new clients at the event. A lot of this is going places where people already know about us. We're just connecting with the network, with the people, with the group. We're having fun. A lot of times I speak at the events. Sometimes we have a booth at the events, but it's kind of how we stay in the conversation, stay relevant, contribute, meet people, see people we already know. They're fun. We enjoy doing them. I have my client success person come with me, and she's like my right-hand woman. We do so well. They know her. It's a good time. And the ROI is very residual on that. Sometimes, people have often come to us and they've seen us at the event, but that's not necessarily how they originally heard about us. Paid ad spend is a very straightforward line item. If I look at my leads each month, let me not stutter and start that over. If I look at my lead source, if I look at my leads each month and look at each lead source, aka how did they hear about us, because I'm investing money in paid ad spend, I would expect to see that they heard about us through one of those paid ad campaigns. And you should be able to trace majority of those pretty close to those. So that's a good example of I better have gotten enough new clients to cover the cost of what I'm paying for this. So make sure that these are meaningful to you and that you have the supporting data to really measure if they're working or not. Now, as I go through mine here line by line, I'm curious as to why we spent more here because I don't know off the top of my head. I see that we're good there. This one, I know what I'm missing, and I simply need to add it to my monthly budget of what I expect to spend here every month. Events, we haven't spent near what we planned, but I know that we're going to have some events later on in the year that are going to more than make up for this. This is one of the line items where I will budget an amount for the entire year, and the number that I'm more concerned with is my year to date number here. Paid ad spend is pretty on point. I'm calling that great. Marketing contractors, I'm a little under. I want to know why, only because I know I can make that more accurate. Marketing software is a little bit more, and software should be really easy to predict. So I'm going to look at that one and see if I need to hone in on that and dial it in a little bit. So drilling down into that first line item where I'm like, I wonder why that was so much over budget. Most of it was due to me becoming a sponsor and presenter of an organization. And I'm thinking about it, and I think this is something kind of new for us, or at least as of last year. And the way that I look at marketing and promotional buckets here is this advertising miscellaneous line item is really for you to kind of dibble dabble, try new things because you always should be trying new things in marketing. And for us, it was that sponsorship, getting involved with different organizations, that one to many mode. And it's working really well. It's going to be a thing. And when that happens to like when we look in this miscellaneous bucket and we're like, okay, I'm going to keep doing this, it's going to be regular, recurring, predictable. Then we need to move it out into this list so that we see it and plan for it separately because we're sure about it now. For me, what I'm going to do is change the description of this events line item into events and sponsorships. Beep boop and done. Now I want to go move this real quick, and I'm showing you this just to show you, hey, it's really easy. You don't have to wait on your bookkeeper to do it. This is a preferential thing. You can just do it while you're in here, and it's easy enough. So I'm just going to move this right on over from advertising miscellaneous to events and sponsorships. Refresh for the update. And done. So now let's drill down to the CMO and PR agent line item. Now I know exactly what's going on here. I added a contractor that I hadn't budgeted for because sometimes that happens. And I just need to simply add that amount. Now, what I also want to do is we no longer have a PR agent, at least for now. So I'm going to change the description of this one from CMO and PR agent. CMO, by the way, is Chief Marketing Officer, which come in very handy if you're a business owner. So I'm going to call it CMO and content strategist because that's just what makes sense in my head. And that's what matters the most when you look at your financials. It should make sense in your head. And the last thing that I wanted to just see in this marketing software bucket was why we were over by $14. Not a big deal, but I just know that we can have 100% accuracy in this line item. So this is exactly what I thought. I just need to update the monthly amount for a new software platform we got on, and this one's good to go. All right, so then we get down to software fees, which I plan for on an annual and a monthly basis. So most of the software fees recur every single month. And then I keep the annual software fees separate because those are really easy to pin to an exact month and a pretty accurate dollar amount. So I'll go through the same level of detail with this list. It's something I know I can be accurate with. So for example, I'm going to adjust some of these up or down just based on what's been happening. Office expenses, even though I'm a completely remote business, I still keep because I have a home office and I still like the idea of knowing what administrative supply space need wise I'm going to need to cover each month because it's one of those very fixed costs. It's the same, it's pretty repeatable, and it has to be covered no matter how well we do that month in revenue. Looking at mine, some of these are absolutely timing. I didn't plan on paying tax prep fees and state income tax until April. This is only January through March. So I know if I draw this out one month, that's going to be a wash and I've planned for it. So it's one of those things, timing really matters on here too. And we're not looking for perfection because year to date, we're exactly where we plan to be. Same thing with insurance for me. I pay an annual and a 6-month premium, and I simply got my window 1 month off. Interest charges, I am going to look into because that seems really high and that should be something that I can get really accurate. So let's take a peek. I'm as curious as you are. Ah, okay. So here's why that is. And now I remember. I upped the payment that I'm making on my EIDL loan to start really hacking away at principal. And previously, I had this entire amount going to interest because it pretty much was purely interest. It's at such a great interest rate. You have a long time to pay it off. Why rush? But I also have to balance the fact that I don't like being in debt, even if it's good debt. So this is my way of compromising with myself and paying a little bit more to interest, but not getting too aggressive with it. So I simply need to update that amount and break out the interest versus the principal on a monthly basis. Moving right along. So the last section on mine, and this is a custom report of mine, I have other reports that organize this differently, is owner benefit. I hear some people that really like very adamantly that they want this owner's benefit section, and it looks a little bit different for each person. I'm trying it out. I'm still not convinced that I even care for it that much, and I'll explain why. It is nice to know as owners exactly how much financial benefit we are gaining from our business because not all of it comes in wages. I mean, I'm being very vulnerable and open with you here. You can see my wages, but that's not all I make because I'm an owner. I have an S Corp. I can also take from profits anytime I like. The business also pays for a lot of expenses that I would have to pay for personally. And some of that reflects here. So I'm kind of trying it out for myself, but I honestly, I don't think I'm going to keep it. And here's why. Automobile expense, that's pretty much me, unless me and my right-hand woman are traveling and we add to it. Coaching expense, these are coaching programs or different things that I am in to make myself better. It is definitely a benefit to me and something I would have to pay out of pocket because I don't have a business. But in my mind, I also enlist and give the opportunity to every single one of my team members to find a coaching program or an education program or something to evolve yourself in your work. So it's really something that everybody gets. And I don't, I could put it outside of this and be just fine. Health insurance, definitely a personal benefit. Meals and entertainment, that's not all mine and it's not all just me. So again, yeah, it's nice, but like really the business should cover that, Travel expense, same thing. Not all of that is mine. Some of that is getting my team to events and such. So let me know what you think about owner's benefit or what would be in your account, but I think I'm going to revert it eventually. So the long and the short of it for us is that Q1 did not produce as much of a net income as we had hoped. Some of that happened up in the revenue, some of that happened in expenses. Either way, we still flipped a pretty good profit. And while we were short, we know why we were short, and we can leave having reviewed this, knowing what to forecast differently so that we can get more accurate. And some of it we just know there's nothing we could have done about it. We're only doing the best we can here. I hope you enjoyed this video. If you did, share it with a friend, hit that like and subscribe, and go check out the playlist. There's plenty more where this came from. All right, guys, that's it for today's money session. My hope is that these videos help make business finance feel less intimidating and a lot more actionable. Remember, you do not need to be good at math. You do not need to become an accountant to be financially powerful. You just need a system, visibility, and the willingness to stop avoiding the numbers. And listen, the goal isn't to do this perfectly. The goal is to understand your business enough to make better decisions with confidence. So if this helped you, make sure you subscribe, share this with another business owner who might need it, and drop a comment with all of your questions and the topics that you want me to cover next. When it comes to money and finance, there truly is no stupid or silly question. Nobody taught you. Now, go look at your numbers, and I'll see you in the next one.